All right, everybody, we are live, we are ready. Good evening, good afternoon, wherever you are. It is October 7th, 2022. It is roughly 8:45 p.m. Eastern Time here in New York City. We are reporting live from the WeWork office here on 57th Street. Today was a very busy day on Wall Street, big day as it relates to the non-farm payrolls. And if you remember, this time yesterday, we took a poll on the chat. I think there was about maybe 900 people in the chat at the time. And we were trying to predict what we think the non-farm payrolls were going to come in at. Now, consensus was for non-farm payrolls to come in at about 250,000. But we did beat that estimate. We came in high, which is good news and bad news, and we'll talk about why. But non-farm payrolls came in at about 268,000. As well as unemployment fell to 3.5%. Now, if you remember from last report, unemployment rate actually ticked up, which was good as it relates to the Federal Reserve. And the reason for that is because Fed Chair Jerome Powell and all the other Fed presidents want to see the economy cooling. They want to see inflation coming down. And if non-farm payrolls come in below estimates and the unemployment rate ticks up, well, that signals to the Federal Reserve that their interest rate hikes are working. Well, that wasn't the case today as markets got hammered, markets got clocked, however you want to describe that. So once we got those non-farm payrolls that came out, the S&P 500 tanked about 104 points today. The Dow Jones Industrial Average was down about 630 points, and the NASDAQ Composite was down about 420 points. So we're going to talk about that report today. But on the live stream, we're actually going to be walking all the way downtown to Lower Manhattan. We are going to go to the Brooklyn Bridge. I think it's going to be interesting. It's going to be a fun night. But until then, everybody, let's see who we have in the chat. Hope you are all well. I see Dan Zhang, the ABX girl. Welcome, Dan. Good to see you, the ABX girl. Austin City Limits. Welcome. Just let me throw my cup out. Show you guys the little WeWork style office here. This is like the little lounge area, I guess. Abdullah is here. I see Golden's Dawn, Jewel Mar, the Walkers. Alfred says, am I having tea? What's your favorite hot beverage? I like coffee. Coffee's pretty good. So let us go down. I'll give you guys one more shot of the office. We do have a piano in here, which is kind of cool. James Tiger is here. Says, Tom working. Why, you guys, why in a minute. All right. Hey, Teresa Diaz. Good to see you, and thank you for the $2 donation. You were too kind. This is 21,800 subscribers. Congratulations. Thank you, Teresa, and happy Friday to you. So we're gonna go out the northernmost side of the office today. We usually go out the back door, but might as well go out the front door. This is gonna be Billionaires Row, Manhattan's Billionaires Row. So the office is on West 57th Street and 6th and a half Ave. So you may be asking yourself, wait, 6th and a half Ave? Yeah, there's a 6th and a half Ave. Right across the street, we have the beautiful 157 building, which was actually the original Billionaires Row building that kicked off this entire trend. And if we pan the camera a little bit to the left, we'll see Central Park Tower. And that gold top is 220 Central Park South. And that is one of the newer developments here on Billionaires Row. War Walker says New York City is extra packed. Good to see you, War Walker. Good to see you. I see Escobar says big hug from Bogota, Colombia. Hey, thank you so much, my friend. I see Mars says, hey, Tom. It's Matt from Colombia. I have worked in 2 WeWork locations in Colombia before. One of them has a floor with free beer and ping pong. Yeah, they tend to have those crazy things. I don't know if they have I'm not sure if they're allowed to serve alcohol in New York, but they do have like coffee on tap. They have a bunch of crazy stuff. Sally says, hey Tom, how was your day? My day was good. Very busy week though. Got a lot done. Very productive, I would say. Busy day in the markets. Non-farm payrolls came out. Now, the funny thing is, I think you guys nailed it. Now, if you remember from last night's live stream, really quick, this is the outside of Carnegie Hall, by the way. Now, unfortunately, all around Carnegie Hall, it has a bunch of scaffolding. I think it's going to be complete. The construction is going to be done by this time next year, so that should be nice. But I think you guys nailed it. You know, we took the poll on the stream last night, and many of you said you think that it's going to be around 270 to 300,000 jobs added. And you guys nailed it. I mean, many economists on Wall Street were expecting 250,000 jobs to be added. We added, I think, 263,000. So we'll talk about that a little bit. Lion Willman, good to see you. Mike C. What's up, Mike? As I tried to take a picture inside the Russian tea room back in the mid-'80s, it wasn't met with enthusiasm, to say the least. Oh, there's no pictures allowed in the Russian tea room? I didn't know that. Did not know that. It's a nice place in there. Definitely a nice venue, not gonna lie. I like the Russian tea room. I see Brian says happy Friday. What's up, Brian? Thank you for joining. The Usual Suspect says, hey, everybody. Usual Suspect, love the username. Good to see you. All right, so this is 57th Street on the corner of 7th Avenue, but check this out. This is the newly finished Central Park Tower. Check out how awesome this building looks amongst the clouds. Really, really amazing piece of architecture here. So on tonight's live stream, everybody, it is a Friday night. You know, the weather was beautiful in New York today. I think it almost got up to 80 degrees. I think it was 76 degrees today. It was sunny. It was beautiful, and it was much needed because we have had 9 straight days of rain and wind and really terrible weather. So I think we deserved it. Beautiful day, and also a beautiful night in New York. Cooling down a little bit. I got a little bit of a jacket on. So we're going to be walking all the way down to the Brooklyn Bridge. And hopefully, if the battery holds up, we'll be able to walk over the Brooklyn Bridge tonight. So I'm sure you guys are going to love that. This is the Brooklyn Diner. Very famous place here. Hey, Gregory is here. Sunshine after rain. Welcome. Happy Friday. Okay, so Mike C says when you went into the Russian tea room, you weren't exactly a customer, you just wanted to take some photos. 10-4. G says, are you going to a party tomorrow night? I am not. G, what about yourself? So now we are looking at the 157 building, which actually has the Park Hyatt inside the building along with the residences. Exploration is here. Welcome, welcome. I see Julia M says hola. Austin City Limits says I know it would be over 250,000 jobs. Yeah, and I mean, so I think it's sort of a little bit interesting and weird, right? Because as a normal person who is not a sociopath, we want to see people getting jobs, right? We want to see the economy doing well. We want to see the labor force expanding, people getting jobs, people getting raises. But as it relates to the stock market, this is a little bit concerning. And if you remember from last night's live stream, I said, you know, if we get a hotter than expected non-farm payroll number, you could see this market really, really crater here. And that's exactly what happened. So it was expected that we would get 250,000 jobs added. We actually came in well above that at 263,000. And essentially what that signals to the market is that the Federal Reserve is going to be more persistent in tightening their monetary policy. Now, The S&P 500 sold off, gave up all of its sort of bear market rally gains. The NASDAQ also sold off. We had the Dow Jones Industrial Average also getting punished. And we pretty much ended the week where we started. Hey, Strider 1239 says chance for a 100 basis point increase in November. Yeah, so I did see that. So I was looking at the futures market today, and I think futures traders, as of right now, are pricing in a 92% chance of a 75 basis point rate hike in November. That was up from 85.5% before the jobs report. So once the jobs report came out, there's now a 92% probability that we're at least going to get a 75 basis point rate hike. So to Strider's point, you know, it's an increased probability that maybe we could get a full 100 basis points or a percentage point. Now, I'm not too sure that we're going to get that, but if I had to put money on it, I'd say that we're probably going to get another 75 basis point rate hike here. Now, as it relates to interest rates, I think it's very, very important to focus on the Fed funds rate. However, I would also like to just remind everybody that, especially right now, it is very, very important to look at the Fed balance sheet, okay? Because oftentimes people only think about the Fed's tool, quote unquote tool, as raising or lowering the Fed funds rate. But they also have a balance sheet where they buy US Treasuries, they buy mortgage-backed securities, and that in turn suppresses rates and provides liquidity to the market. And if you remember back to the last couple live streams, right, this week, we were talking about the illiquidity in the debt market or the Treasury market. Wow, check this out. You could actually see the 432 Park Avenue, which is a Billionaires Row building. We could see it right here from Broadway and 57th Street. So there's pretty much no liquidity in the debt market, which could potentially lead us to run the risk that happened in the UK with the gilts. So the bonds over there are called gilts, where we saw an uncontrolled sell-off in that debt market with yields spiking. So I want to turn everybody's attention to this. So US Treasury securities on the Fed balance sheet dropped $37 billion on this week's H4-1 report. This is the largest drop in US Treasuries on the balance sheet in 14 years as quantitative tightening continues to ramp up. So not only is the Fed raising rates, but they're also shrinking the balance sheet and dumping US Treasuries. Hey, John says, do you ever get some Danish coffees? Seems to be popular on Wall Street. No, I don't know what that is. Wendy England, good to see you. Thank you for being here, Wendy. Julie M says Fed's funds rate will be 7%. I mean, I don't know about that. I mean, you think they're going to get that aggressive with raising rates? I mean, maybe possible. Maybe possible. Austin City Limits is Tom in November or December rate hike, 75 basis points. Possible. Barry Bell says every big shot to stop by CNBC didn't exactly draw a rosy picture either for 2023. It's exhausting, says Barry Bell. So I didn't watch CNBC today. But what was everybody saying on CNBC? Oh, it looks like somebody broke the glass here of Nordstrom. That's not good. GX72 is joining us. Good to see you. Wendy England says, I think they want rates between 4 and 5%. Yeah, I think you're right, Wendy. I think I agree with you. You know, our current Fed funds rate target right now is, I think, 3.25 to 3.75%. So with the 75 basis point rate hike in November and maybe like a 50 basis point rate hike in December, that should take us to a target of about 4.5 to 4 3/4. Now, that's really going to put additional strain on the US equity markets as well. So I think we need to watch that. Now, I've said many times that I believe that the vast majority of this selling in the major equity indices has been due only to interest rate hikes. Okay, so not taking into consideration any, let's say, for example, earnings revisions to the downside. But we got some news out of AMD, which is a major semiconductor company, yesterday, that they are essentially cutting their forward guidance and their profitability and also slashing their gross margin estimates. So they were forecasting about 55% gross margins. Now they're forecasting about 50% gross margins. And if this is really broad-based across many stocks, I think you're going to start to see the market, which should take all the major equity indices substantially. Hey, Ethan G, good to see you, man. Says, I'm not too optimistic. I'm more of a complainer when it comes to weather and finance. Well, I can't complain with you there. Well, I try to look on the bright side of things, but I did want to bring everybody's attention to this. Now, I didn't want to make the stream too much of doom and gloom. Really quick, I'd like to point out the fact that we are here at Columbus Circle. Beautiful Columbus Circle. D is here, says, good evening, everybody. Dark Op says, let us go tonight to the Wall Street. Good to see you, Dark Op. So this is the Trump International Hotel and Tower now. Very beautiful building here, right next to the Deutsche Bank Tower. Julius says we're buffering. Yeah, there tends to be a lot of dead zones around Columbus Circle. Usually we don't like to stream around here, but we'll do one lap around the circle and then we're gonna head downtown. But I would like to draw everybody's attention, if you have a, let's say, a trading view account or something like that, I want everybody to pull up a chart of the S&P 500, all the major indices, and put a 200-week moving average on the weekly chart of the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. And you're going to notice something very, very critical here and very, very important. Okay, so I think it's most important for now to review the intraday action on Wall Street, and then to sort of explain my concerns as we're overlooking Billionaires Row here. Now today, the S&P 500 fell about 104 points to 3,639. The Dow Jones Industrial Average fell 630 points to 29,296. And the NASDAQ Composite fell 420 points to 10,652. But here's where my big concern comes in, and this relates to the 200-week moving average. The S&P 500 has now broken below its 200-week moving average for the first time since 2020. And the only other time it's done that before 2020 was in June of 2008, right before the major equity indices fell off a cliff during the great financial crisis. So if you're looking to take risk in this environment, if you are maybe actively managing a portfolio or something like that, assuming these indices break below the 200-week and remain there, I wouldn't be looking to add additional risk there if you're actively managing a portfolio. Because look what happened in 2008. The Dow Jones Industrial Average already broke below its 200-week moving average. The last time it has done that was June of 2008, and briefly before the Fed bailed out the markets in 2020. Hey, William Brooklyn is here. This is checking in from Brooklyn. Great content. Thank you. The smartest person on YouTube. Thank you, Brooklyn. Appreciate you very much. John says, I'm wearing headphones and I still don't think the amount of noise in the city comes across. I definitely think your mic cuts off a lot of the background noise. I'm not sure if that's a good or bad thing, but thank you, John. I appreciate it, man. Z is here. What's up, Z? So let's make our way around the Columbus Circle, and then I think we got to pick up the speed, because if we're going to make it all the way down to the Brooklyn Bridge, I think we got to pick up some pep in our step. Hey, Gary Carpenter is here. What's up, Gary? Welcome. Thanks for joining us on this beautiful night in Manhattan. We are here at Columbus Circle. Denise M is joining us. Good to see you. Walking Minnesota. This is 200 moving average is apparently very widely used among institutions. Yeah, so it's very, very widely used amongst trend traders. So very long-term trend traders. The reason why I use it is because I've studied extensively the likes of Paul Tudor Jones and Stanley Druckenmiller. And if a stock breaks below the 200-day moving average and stays there, there's a pretty good chance that it's going to remain under that level for quite some time. Now, I tend to be almost a pure fundamentalist, but one of the funny things that happens is when you look at these charts and when you really, really study charts, the best looking charts in terms of bullish setups tend to come from the most fundamentally sound companies, right? But when you look at charts that are abysmal and they have such structural damage, for example, like Meta, right? Like Facebook. And we've been posting a lot about this on Twitter. So if you guys want to see my thoughts in real time during the day on Twitter, you could follow @WalksWallStreet. But the fundamentals will usually coincide with either the damage or the strength in many of these charts. So what you want to do in being a contrarian to regular belief, you don't really want to buy low and sell high. You want to buy high, sell higher. And if you're selling short or you're going on the short side of the market, you want to find the companies that are very, very beaten down, right, below their major moving averages, and you want to short their rallies. Hey, Dusty Cole is here. What's up? Good to see you, Dusty. Dan Zhang says, or if you look at the chart of natural gas, ticker symbol NG, that'll give you a huge headache. Yeah, that's true. Well, the interesting thing, to Dan's point, crude oil is rallying very, very hard again. And this comes in the wake where we just started to get declines in headline CPI. Okay, now why is that important and why is that not important? Well, I think one of the main reasons why it's important is because headline CPI is inclusive, or it includes very volatile food and energy. Okay, so the good news is we have seen headline CPI come down quite substantially, but what the Federal Reserve likes to look at, right, as it relates to, their influence on monetary policy, whether they're going to raise or lower interest rates, the number one thing that they look for is the core CPI, which excludes volatile food and energy. So it seems as if the only thing that we've been making progress on to get down inflation is now ramping again. Now, if you guys remember, and I think me and Dan were talking about this, if you look at crude oil futures, right, you could look at Brent crude, or you could look at light sweet crude or light crude futures, ticker symbol CL. We have now broken above the 50-day moving average on volume. And I believe Brent crude closed at about $97 a barrel, breaking above its 50-day moving average. Ticker symbol CL, which is the light crude futures, breaking above its 50-day moving average again to about $92 a barrel. So big move off the bottom here. And I think this comes in the wake of the escalation of the Russia-Ukraine war. There's even talk about the use of tactical nuclear weapons, which is a disaster. It's a horror show. And OPEC announcing that they will be cutting production by 2 million barrels a day putting a lot of upward pressure on oil and gas. Hey, Dark Ops says, I have 590 shares of AMC. Do you think the squeeze will be coming soon? I don't really pay attention to any of the meme stuff. Hey, Dusty Cole. This is Tom. Always great to hear you, buddy, and walk with you. Thank you so much. Wow, this is a really good shot, guys, of the 157 building on Billionaires Row. Hey, Patrick NYC is here. What's up, Patrick? Good to see you. Hopefully you're having a fantastic Friday night. Now, it was a beautiful day in New York. I'm not sure for all of my New Yorkers in the chat. It was an absolute beautiful day, and we needed it. I mean, the weather has been horrible for the past 9 days. We've gotten back-to-back days of just rain and nastiness, sort of getting the remnants of Hurricane Ian. But today was awesome. I think today almost got up to 80 degrees, but temperature's dropping a little bit. So here are the Central Park horses. Hey, Paulette. This is beautiful city. Thank you, Tom. You're doing such a marvelous job. Hey, thank you so much, Paulette. I appreciate you. GGMYC says it was a perfect day. It really was. It was an awesome day in New York. Beautiful night, too. Jonathan Francis here says it really was. Stephanie is here, says I agree. What's up, Stephanie? Good to see you. Patrick New York says yesterday was beautiful. The one and only Mighty Bull is here. Says greetings, everybody. What's up, Mighty Bull? Now, if you guys were joining last night's live stream, I actually showed you guys where they park these horse carriages and where the horses actually sleep at night. It's right around the DeWitt Clinton Park on the west side of Manhattan on 11th Avenue. The wind is really picking up here too. I'm not sure if the wind noise is showing up in the microphone, but you have a lot of wind noise here. Gary Carpenter, good to see you. Julian says hello, everybody, and good evening. Good evening, Julian. Thank you for joining. We are on 59th Street, Central Park South. We are walking directly in front of the New York Athletic Club. This is a very prestigious club here on Central Park South. Yes, John, the stables. That is definitely the correct terminology. Golden's Dance's beautiful horse and carriage ride. Hey, Kevin Ramsey's joining us. This is a very cool night here in Cincy. What's up, Kevin? Dan Zhang says, have you ever looked at the ticker symbol RB, which is the gasoline futures? It is more related to the gas price, but it's kind of more institutional trading because there's bid-ask spreads. I never really look at that, Dan. I'll probably have to add it to my trading view list. I'll definitely add it. Now, I've been seeing a lot of crazy stuff on Twitter, but then again, you know, this is obviously anecdotes. But a lot of my friends who I follow on Twitter that live in California, they've been sending me crazy gas prices. $6.99, $8, $5.50, pretty much all over the board. But depending on where you are in California, chances are you're probably paying over $5 a gallon. Hey, Gary Carpenter says, Tom, it's pretty cool here in North Carolina as well. 10-4, copy that. Hey, Daniel says, thank you for your Manhattan tours. God bless you. God bless you too, my friend. Thanks for being here. Billy says, listening to you while watching my Padres. Sorry we're up 3-0 on the Mets. Very nice. What's up, Billy? Good to see you. Hopefully you had a good week. Hope you have some interesting plans for the weekend too. So we're about to come across my old building here. So 106 Central Park South. And I think I told you guys this many times, but 106 Central Park South is a great building. And during the COVID crisis, everybody was panicking and moving out of the city. And that allowed for great opportunities to move into some really, really good buildings at bottom of the basement prices. So I was able to get a studio apartment, obviously rent it, not buy it, right here on Central Park South. And it was by far the best experience I've ever had living in New York. And I was very blessed to be able to do that because everybody was dumping real estate for that specific amount of time. Now, everybody knows the story of what happened after that. The rents slingshotted back in the other way. And I think when I moved out, my landlord raised the rent in this building right here. Oh, I think they actually broke a panel. That's not good. I think my landlord raised the rent from just under $2,000 to about $4,300 to $4,500 a month for a studio apartment. Now, granted, I did have a view of Central Park in the unit, but talk about crazy price swings. Really, really crazy. All right, well, now we are on the corner of 6th Avenue, or as they call it, Avenue of the Americas. Dan Zank says, what was it like living in the city during COVID? Now, this is going to be a weird answer, and I kind of feel bad saying this, but it was actually kind of nice. It was actually really, really nice living in the city during COVID. I'm not going to lie. You know, we'll continue to walk down here since we very seldom go towards the Plaza Hotel. I guess I'll show you guys the Plaza. But right here is the Ritz-Carlton. Yeah, Dan Zhang is like, damn, Tom, I feel you on the rent raise. Yeah, so Dan just recently moved out of Long Island City. Long Island City is beautiful. Chances are if you live in LIC in one of those newer buildings, you probably have a really good view of Manhattan. But living in the city during COVID was rather nice. It was really, really nice. And for those of you who've been watching these streams for quite some time, you remember the live streams during COVID. You know, it was peaceful. There was nobody on the sidewalks, no car traffic. You could literally walk in the middle of the street. It was, I think, an experience that nobody will ever be able to experience again. Well, hopefully, that there's no more pandemics. I think you guys understand what I mean. So this is the beautiful Park Lane Hotel. This hotel, they actually did a complete gut renovation. So if you stay here, a lot of the units are actually fully renovated in here. I stayed in here one time. It's nice. Dark ops, is it worth to invest in ExxonMobil or other oil companies? I can't really advise. I can't tell you to invest in specific stocks or not. Stephanie says, I went to college in Long Island City. Nice views and not so far of a commute from the city. Yeah, LIC is a very nice place, very up and coming neighborhood too. So we'll quickly review I guess sort of the outlook, right? And I think a couple market mechanics that we really need to be paying attention to and really watching. So we got the non-farm payrolls today, and they came in hotter than expected. Now, does any of you remember back in the days when we got, you know, non-farm payroll numbers that were better than economist estimates and everybody was cheering and everybody was all happy and it was good news? Yeah, I remember those days too. But it seems as if now that we are in this very, very distorted market, what I mean distorted is that anybody who has equity exposure who wants the start of a new bull market, we've sort of reached this paradigm in the market that the bad news is technically the good news in relation to a potential easing in monetary policy. And good economic news, right, a surprise to the upside, is actually viewed as rather negative as it relates to risk-on assets. Because the Fed's goal or their job or their mandate is to get inflation back down to the 3% target. And in that non-farm payroll report, we actually found out that wages went up about 5% year over year. This is one of my favorite views of 432 Park Avenue. Right here, beautiful. So In the non-farm payroll report, wages or wage pressures went up about 5% year over year. Now, why is that an issue? Well, for me, I'm happy for people, right? I'm glad that wages are going up, but one of the biggest pressures, or one of the many, right? Another one is called shelter costs, which makes about 33% of the CPI. But another one is wage pressures. And the reason why we've been seeing this is because the labor force participation rate has been at historic lows. And the demand for jobs, or I would say job openings, I think the last time we talked about this, there was roughly 2 job openings for every 1 American looking for work. So if you're interviewing for a position, right, and you're interviewing with multiple companies, and maybe you're interviewing with 5 companies and you get a job offer from 2 of them. Well, who has the vast majority of the bargaining power, right? It's the employees. So you could say, you know what, I would much rather go with company A, but company B is a little bit closer to my house. So in order for me to accept your job offer, Mr. Company A, I'm gonna need a 5% bump in your base salary offer. Right, that's just one example. And wage pressures have really been taking off here, adding to inflation. So the Federal Reserve has been raising interest rates back to back by about 75 basis points. The fastest interest rate hikes in the likes of 40 years. And we still don't see inflationary pressures coming down as fast as the Fed wants to see them. Now, on the other hand, if you look at a lot of the leading economic indicators, that does show a lot of demand destruction, and it does show that inflation is probably going to come down, but it's going to take a couple months or even a couple quarters for that to move through. David C. Randall is here. Says, hello, my friend. What's up, David? Thank you so much for being here. Gaming Commander is here. Good to see you, Gaming Commander. John says, yes, but those are probably mostly minimum wage / low skilled jobs. Well, we could go through the report. So to your point, they don't publish what the average salary of those particular jobs were, but they do give a breakdown on what specific sectors the vast majority of the job gains made up. So we can go through that and we can break it down. Now, if I'm not mistaken, I think hospitality and restaurants added the most jobs. And I think the manufacturing sector added the least, which would make sense because if you remember all the way back to Monday, we talked about that Institute for Supply Management PMI report, so the Purchasing Managers Index, and that gave us a little bit of an insight into what some of these jobs numbers may look like. Hey, Vinny Castellanos says, Tom, are you gonna live stream the Halloween parade? I'm not too sure, Vinny. I'm gonna give that about like a 50% chance, maybe 50-50. Good question. Hopefully you're well, Vinny Castellano. Please send my regards to Maria as well. So this is the Apple Store right here on 5th Avenue. This is the flagship Apple Store. But I think hospitality added about 83,000 jobs. Healthcare added about 60,000 jobs. Business services added 46,000 jobs. And manufacturing came in on the tail end, adding about 22,000 jobs. So a pretty strong report, which is good, right? We want to see people getting employed. We want to see people doing well. But as it relates to monetary policy, I think the Fed is going to go scorched earth and continue to add big as it relates to interest rate increases. So looking across the street here, everybody, this is the Plaza Hotel. Looks beautiful tonight. I see Karina Thompson is here. Says hello, Tom. What's up, Karina Thompson? Gaming Commander says, how are you, Tom? I'm doing really good. It was a busy week. Got a lot done. So very happy about that. G says the average home price in New York City is $1 million. I could agree with that. Hopefully as interest rates go up, we could see some of that subside and come down. Hey, Marcelo Gill. This is Tom, TGIF. Good to see you, Marcelo. We're overlooking the Stairway to Heaven building, or the Steinway building, which is, I would say, I think this is the newest edition of Billionaires Row, right there. Hey, Wendy England, thank you so much for the 20 Canadian donation. Just had a really great day today and sending positive vibes. Well, thank you for the support, Wendy England. And I hope you have a fantastic weekend. This is one of the original hot dog carts here in New York City. Edson says, hey Tom, what's going on? What's up, Edson? Good to see you. So this is the front of the Apple Store. But we're going to continue on our walk. We're going to head down 5th Avenue tonight. I don't think we've walked down 5th in a while. So I don't really want to say getting a lot of questions, but I've been going back and forth on Twitter with a lot of people. And I'm seeing a lot of folks, just because the market is down, they're trying to, buy stocks that have been getting crushed. They're trying to buy Twilio. They're trying to buy, all the ARK ETFs. They're trying to buy Meta. Right? They're like, Facebook is a good company. It's down about 70%, I think a little bit more, so I'm just going to aimlessly buy it. But that's not the right approach. And the reason why I say that is because when these companies are getting hammered like this and they're down 70%, 80%, they're usually down so much for a reason. And now they have a ridiculous amount of overhead supply that in order for those particular stocks to ever reach all-time record highs again, they have to work through all of that overhead. So as it relates to market psychology, the people who bought near the top or maybe have been trying to buy the dip and have been constantly getting creamed and seeing their equity curve go down, when markets rally back up to the point where they purchase stock, they're just going to sell and you're going to have a lot of supply coming back onto the markets. So we've talked about this before, and usually what happens when new true market leaders emerge, right? So assuming, let's say, the new bull market starts, we get a follow through day. I don't think we're there yet. It's going to be very, very obvious which stocks are going to lead this market higher. Okay, they usually have 90% relative strength, or a 90 to a 99 relative strength score, which means those particular stocks are either trading near 52-week highs already, or just outperforming the vast majority of the stocks in the market. And those are really the first ones that are going to break out first. So during times like this, you want to be running your screens for companies that fit the following criteria. Now, number one, they should generally, I'll cross here on 5th so I could show you guys the other side of the Trump Tower. And then I'll take you guys to St. Thomas Church. You want to look for a company that is consistently showing very solid and sustainable earnings growth. Not only on a quarter-over-quarter basis, but on a per annum basis. So you want to look for stocks that are compounding out their earnings, or EPS, earnings per share, at about 25% quarter-over-quarter, or 25% per annum. You want to look for revenue growth to also be at least 25% revenue growth quarter-over-quarter. You want to look for very high return on equity, or ROE, of at least, I would say 35 to 40%. If you look at previous true market leaders of the past, like your Microsoft's, I think Microsoft has about a 45% return on equity. You also want to look for very, very solid pre-tax and after-tax profit margins. Okay, and that is sort of like the magic elixir to make a true market leader. And when the market's bottoms and when you have a follow-through day and you see all of these stocks breaking out, it's going to be very obvious but you want to make sure the fundamentals corroborate, however you say that word, with the technicals. And you don't want to be buying something that's down 80%. You don't want to be buying something that's already been hammered and obliterated, because your chances of success are not high. Hey, John L is here. What's up, John?
Hi.
John, long time no see. Hopefully you are well. We are outside, everybody, the St. Regis Hotel. Beautiful hotel here. Carol Williams is a blessed Friday night and stay safe and enjoy the weekend. Thank you, Carol. I appreciate you. Charles D says, Tom, AMD took a beating today near its 52-week low. Yeah, Charles, you're right. I think that was off of a profit warning. So I think AMD came out and started to warn that they were going to miss their revenue targets. They were going to also cut their forward guidance and cut their gross margin targets too. So you're right. Charles D, thank you for joining. Good to see you. Hey, Dominic Romano says, what's up, Tom? Good to see you, Dominic. Dark Ops says, do you like the Adidas store or Nike better? When I was younger, I used to like Nike a lot, but now I actually like Adidas a little bit better. Hey, Michelle McGraw is here. Good to see you, Michelle. Thank you for joining. Michelle is our great moderator. Rockstar is here. Says best to wait for markets to go into contango to start buying the dips. Yeah, so Rockstar, what do you think about this? And I want you guys' thoughts about this. It seems like this sell-off so far in the market, right? Ever since January 2022 is when the markets really started to sell off. This has been a very, very structured, I would say very organized sell-off in the stock market. And usually when markets bottom, you see this massive waterfall effect. Okay, so you think about where you were during the big COVID crash. The Dow was reeling down thousands of points. We hit circuit breakers, limit down. And that is capitulation. That is true fear in the market. But in this bear market, you know, we've been having a very, very normal course of action. It seems very strategic. It seems very orderly. It doesn't really seem yet that we've had that big waterfall sell-off to the downside. And I think we're going to get that. I think in due time we are going to get that. And usually around those times, that is a good time to put money to work, maybe buying the indices in a retirement account or something like that, when you have those big flash crashes like you had in the crash of 1987. So check this out. This is St. Thomas Church. This is one of my favorite churches in the entire city. Check out how beautiful the architecture is here. It's fantastic. Rockstar says, Tom, true, it's been very orderly selling. Yeah, so Rockstar, what do you think? Do you think we're gonna start to get that big heavy volume capitulation? And if so, when do you think we're gonna get that? Senzo says, we will, and exactly why I shared what I had. Good to see you, Senzo. Hey, Vincent NYC. I'm not sure what that is either, my friend. My fam says Brazil is with you. Good to see all of our Brazilian viewers. Great Triff's here. Says, hey, Tom, good to see you. I see Austin City Limits. Dutchman, what's up? Here, let me stand back a little bit further because St. Thomas Church is absolutely beautiful. Just the guy says, what about just keeping the course of dollar cost averaging, says just the guy. Yeah, so I agree with that, just the guy, but I'm more talking about, like, let's say if you're managing a portfolio, right? Let's say if you're a hedge fund manager and you have to report your P&L to your clients, that's sort of a different situation than, you know, having a retirement account and you're, you know, 35 years old and you just consistently add every month and dollar cost average into the market. That's what I do, right? So I have a retirement account, an IRA, where I think it's the second to last business day or the last Tuesday of the month. I just have an automatic buy into an index fund, the S&P 500, in my retirement account. But I also manage money, and I need to protect my capital. And I am a CAN-SLIM investor, so Investors Business Daily, I sort of follow to a T. So I've really been out. I have probably some of the most cash heavy I've ever been in years. So when I'm talking about this, I'm more along the lines talking about managing a portfolio and like reporting a P&L. Because if you're managing a portfolio of individual investments, right, or individual stocks, you can't afford to ride these things down 90%, which many of retail investors have done so, right? So if you are actively managing a portfolio, right, let's say either for clients or for yourself, and you're managing 7 to 10 individual names, well, you're not going to hold them down 90%, like many people had. You have to manage your risk there. So I think there's a little bit of a difference, but it's a good point. It's a good point. Hey, Clarence Jackson since 5th Avenue is getting ready for the parade. Which parade? Oh, was that the Halloween parade that Vinny Castellano was talking about? MK, good to see you, MK. Welcome. Grand Street once as the stock market is now circling the drain. MK says, hey Tom, I don't think these circumstances have arrived for that kind of sell-off. There's no tipping point event to create that level of chaos yet. Just curious what you think the tipping point might be, says MK. Yeah, so I guess I could go into that a little bit. Christian Suarez is here. Says, good evening. Hey Christian, good to see you. So this is what I think the biggest risk to the stock market is. Now, I always talk about this, and I'm almost to the point of ad nauseum, and I think I may be annoying you guys a little bit. But if you want to know where the stock market is going to go, you have to keep your eyes peeled on the debt market, because the stock market in and of itself is a derivative of the debt market, right? So the stock market derives its value from the debt market, and I think the biggest threat to an uncontrolled sell-off in the stock market is an uncontrolled sell-off in the debt market. And I'll sort of explain what I mean by that. So this is the Versace store right here on 5th Avenue. And I'll give you guys a very recent example of that. So knowing that bond yields move inverse or have an inverse correlation to bond prices, when bonds start to have an uncontrolled sell-off, what happens is yields start to spike uncontrollably, right? You get this big uncontrolled blow off, yields start to blow out, and stocks crater. And that's exactly what we saw in the UK. What we saw in the UK is gilts, right? So their bonds are called gilts. Liz Truss decided it would be a great idea, as inflation is ramping 9% a year, to unveil sort of like almost sort of like a Reaganomics stimulus package where you cut taxes and spur economic growth. Now here's the problem. What she was proposing was absolutely going to work. It was absolutely going to spur economic growth, but here's the problem. Maybe not the best idea to do that when inflation is ramping 9%. So the bond market is like, oh my God, that's actually going to work, which means economic growth is going to be stimulated, but inflation is going to freaking go on a rocket ride and rip everybody's face off. So I don't want anything to do with the pound. I don't want anything to do with the bond market. I'm getting out. So you had this pan sell-off event where gilts, people were dumping gilts, bond yields were spiking. A lot of pension funds who had gross derivative exposure to these markets started to hit their margin calls. In order to meet your margin call, you have to sell other assets. So it creates a perpetual waterfall cycle. And that's why the Bank of England actually had to step in here and start buying gilts or buying bonds to stabilize the debt market and stabilize the currency. So there was an interesting Barron's article last week, and the Barron's article said something like this. And there was a particular, I think it was, I forget what firm he was at, but if you look in the link in the description, it's in the Discord. I dropped the link to that Barron's article. And essentially what this analyst was saying is that once Fed funds get to about 4.5%, or excuse me, he said once the 10-year US Treasury yield gets to about 4.5%, he thinks we run the risk of a severe credit crunch and a liquidity crisis. And we could have a big flash crash in the bond market, which could lead to a big crash in the stock market. So long story short, I always keep my eyes peeled on that 10-year yield. If we start to see that 10-year yield spike uncontrollably, I think you're gonna see a waterfall sell-off in the stock market, and I think it could get pretty ugly. So we are now outside of St. Patrick's Cathedral, everybody, and we have our good friend Bonnie Hudson here. Says hello, Tom, and everybody. Hey, Bonnie. Thank you for being right with us. Appreciate it. Photos from around New York says, how do I look at the debt market? So what I would do is I would go to cnbc.com /bonds. So CNBC /bonds. And it'll actually give you the real-time yields across the entire curve. So you could look at the 2-year Treasury, the 10-year Treasury in real time. Also, if you want to look at a more in-depth chart of the Treasury yields, you could just go to tradingview.com and do that. Hey, Dean is here. This is hello from Brazil. Good to see you, Dean. If you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, and we would love to have you guys along for the ride. Now we are standing outside of the Saks Fifth Avenue, which is a very upscale clothing store here in New York. And we are looking at the St. Patrick's Cathedral that is on the corner of East 50th Street and 5th Avenue. Senzo says, great shot. Thank you, Senzo. Appreciate it. Lemonade is here. It says, good evening, Tom and everybody and all mods. Welcome, Lemonade. Thanks for being here. Hey, Eric is here. This is good to see you. How you been, Captain? Eric, I know you were caught in the hurricane down there in Florida. Trust you well, my friend. Julia M says, Tom, do you have any recommendations for a Miami spot or in Fort Lauderdale for a group of 25 with at least 20 beds for an off-site for my office? Julia, if you send me an email, walkswallstreet@gmail.com, I'll try to connect you with some recommendations. But Julia, good to see you. Happy Friday. Hey, we got the FDNY in the chat. Good to see all of our New York City firefighters. The Papa Smurf OG says, hello, Tom. Great to see you again, my friend. My life has been busy working 13-hour shifts. Hope you are staying warm. Fall is here. Well, God bless you, man. Thank you for all you do. We love the FDNY. But I've been good. I've been doing a lot of travel. I just got back to New York like 2 days ago from Miami. It's good to be back. It is a little bit chilly. We are standing outside 30 Rock, Rockefeller Center. Ooh, Eric says, Tom, it was horrible down here. 5:30 p.m. Everything got wild in Sarasota, Florida, and Fort Myers. Yeah, I was looking at some of the devastation on Twitter. It was horrible, horrible. But the good news is that you're okay and you're safe. Good to hear that, Patrick. Hey, Marcy is here. Says, how is everybody? What's up, Marcy? Good to see you. Tiago Pereira is here. Welcome. Miguel says, favorite breakfast place in Manhattan. Ooh, Miguel, I got you right now. All right, if you're in Manhattan and you're looking for by far the best breakfast place, you're gonna go to the Upper West Side of Manhattan, and there's a place called Good Enough to Eat. I'll say that again. The place is called Good Enough to Eat. It is on the Upper West Side of Manhattan, and it is by far the best breakfast you're ever gonna have in your life. And you could quote me on that. Papa Smurf says, appreciate the support, Tom and everybody else. No problem. We love the FDNY, NYPD. You know, the Papa Smurf, I actually took everybody to John Jay College yesterday. A lot of police officers, FDNY come out of there. That's where I went to school. It was cool to go to 11th Avenue again. Dark Ops says, Tom, would you like to have your own hedge fund? Yeah, maybe one day. I think that'd be interesting. Hey, David says that iPhone 13 mini does an excellent job with the night shots. Yeah, I mean, I have no complaints. You know, David, I think you've been here when we were filming on the iPhone 11. The iPhone 11 was pretty good too. So Photos from Around New York just dropped the link to Good Enough to Eat. It's fantastic. Photos, I'm assuming you've been there before. It's a fantastic place. Miguel says, thanks, coming to New York City soon. Trip already booked, going to definitely get breakfast there. Yeah, that place is fantastic, man. Yeah, Gregory's like, personally, I am waiting for the iPhone 18. Clarence Jackson says, I'm planning to attend the Greenit. Oh, cool, man. Economic Forum with Ray Dalio, Sam Zell, and Kathy Wood. Clarence, I want to attend that too, my friend. That's awesome. So Clarence, I got a question for you and everybody in the chat. So I wrote something down. You know, I was going through all my charts today, and here's where I'm very, very concerned now. All right, so if anybody, I'm assuming a lot of you already have like a TradingView account, something like that. I want you to pull up the S&P 500, ticker symbol SPX, go to a weekly chart and put a 200-week moving average on there. Now, you'll notice the only other two times that the S&P 500 has sliced below its 200-week was for a brief time in 2020 before the Federal Reserve bailed the market out, and in 2008, June of 2008. And I think once the indice, the S&P 500, sliced below the 200-week, it went on to decline another 40%, and we were in an extreme bear market. Now, for the equity indices to decline under the 200-week signals really, really abysmal strength and abysmal breadth of the market, and that could drive us into a huge bear market. Now, the Dow Jones Industrial Average is already well below the 200-week. It closed below the 200-week this week again, and the NASDAQ is also below its 200-week moving average. Now, the interesting thing about the NASDAQ is that if you look at the 2020 COVID crash, we actually didn't break below the 200-week at all. We actually bounced right off of it. So the only other time the NASDAQ composite broke below the 200-week was in September of 2008 during the Great Financial Crisis. So could this be the start of a more structured, elongated bear market? I think it's very possible. I think it is very, very possible here. Yeah, Austin city limits is very windy. It is a really windy night tonight. Very windy. RJ is here, says, hola, Tom from Colorado. Good to see you, RJ. Exploration says, ARK hasn't been too hot for a while. Yeah, so the ARK ETF has been loaded with a lot of the very high beta speculative garbage companies that do not do well in an interest rate environment that's rising. Hey, greetings from Istanbul. Love the publication. Well, thank you for listening and thank you for being here. We appreciate it. Dutchman says, Tom, do you see the Fed raising interest rates more before the end of the year? I do. I actually think we're probably going to get another 75 basis point rate hike next month in November. And that is because we got the non-farm payroll numbers out today. Now, consensus on Wall Street was that we were supposed to have roughly about 250,000 jobs added in the non-farm payrolls. we actually came in above those estimates, coming in at about 263,000 jobs. Also in that report, we saw wages increase about 5% year over year. So, Dutchman, that's good news, but it's not good news in terms of monetary policy if we want the Fed to pivot and start to ease up on raising the interest rates. But the more good economic news we get, that means the tighter monetary policy is probably going to be for a longer duration. Hey pups, this is Hey from Australia. I watch every afternoon. It is Saturday here. Thank you all of our viewers from Australia. You know, speaking of Australia, I got a very, very nice email the other day from a gentleman in Australia that has a family office. And he sent me a very, very nice email, and I appreciate you for that. And sent me some good documentation, which I appreciate. So thank you all of our viewers in Australia. Hey, Mr. Bagman says Fed's going for 2 full point hikes before year's end. CPI comes in hot. This is Mr. Bagman. Julia M says, do you think the Fed will raise before the midterms? Yes, I think so. Now, I mean, Julia, the only good news, because I know we've been talking a lot of bad news tonight on the stream, I think the only good news that we have is that historically, during a midterm election cycle, so during the year of a midterm election, the first half of the year, stock market declines are always present. So the markets never do well during midterms. However, after midterms, it's a different story, and we'll talk about that in a minute. That's one Vanderbilt. So we are headed across close to one Vanderbilt, as well as Grand Central Station. Yeah, so Billy makes a really good comment. So Billy Benoit says markets hate uncertainty, midterms will ease that uncertainty. Now, I've said this before, but I think it's good to review it again. We'll wait until the cement trucks go by. A lot of construction on this block. Check this one out, guys. This is the beautiful Chrysler building. Looks fantastic. So here's an interesting piece of data that we've reviewed before on the streams, but I think it's important to review it again as we head towards midterms. Now, this piece of data comes out of Fundstrat, that is Thomas Lee's equity research firm based here in Manhattan. And he did a study, and if you look back throughout history, the best stock market environment tends to be when there is a Democrat as a president, but Republicans control both houses of Congress. Now, this midterm elections, we could definitely create an opportunity where that exact scenario comes about, where we have one of the factors already, President Joe Biden, he's a Democrat, right? So that's number one, we have that. But if everything flips to the Republicans, which is very possible, according to the data. Now look, it doesn't, I try to put your political biases aside. I don't care if you guys are Democrats, Republicans, Independents, it's irrelevant. I'm just trying to give you the data here. If both, hold on. For some reason my camera looks out of focus. Is my camera in focus for you guys? I just want to make sure it's not all fuzzy on your end. But if we flip to Republican in both houses of Congress, that would be the most ideal scenario for the equity markets. And the reason for that is because the markets in general like when really nothing gets done. You know, if we have Joe Biden in there, a Democrat, and we have the Republicans controlling the Senate, do you really think there's going to be any new rules, regulations, or legislation? Probably not. And that essentially rids all of the uncertainty out of the markets, so now people can better deploy capital. So I think we have to watch that. But I'll take you guys for a quick stroll around Grand Central Terminal. We haven't been in here in a long, long time. Wow. So here we are inside Grand Central Station. Hey, Ralph says, I feel we are in a 100-year cycle. Still some turmoil to come if history repeats itself. This is Ralph. Toby Sanchez says, hello, Tom. It's not focused. I see everything clear. So it is focused. Good to see you, Toby. Thank you for being here. We are inside Grand Central Terminal. Taxi Cab says, hey, Tom, do you believe that... I don't know about that, Taxi Cab. I'm not too sure. I think that central banking is making boom and bust cycles way more forceful, I should say. Yeah, War Walker, good thought there, dude. We do have to make it all the way down to the Brooklyn Bridge, and we better get going. Hey, Brad's Brain says, I think that's old school, Tom. Recent years, the party with the most power makes significant moves. If Congress is Republican, they'll make changes. This is Brad's Brain. Maybe you're right. That's a good thought. I never thought about it like that, Brad. That's a good point. Jack says, Grand Central not as busy as it used to be. Yeah, I mean, not for nothing. For a Friday night, it's not too busy. But then again, I mean, it's a Friday night, so everybody's probably at the bars, hanging out, going to a dinner. So the volume and the traffic at Grand Central should probably pick up pretty soon. Emma Pretty says, thoughts on the movie Wolf of Wall Street? It was an alright movie, but I think at the end of the day, though, Emma, to be honest, if you're interested in learning about Wall Street and how to invest properly, Wolf of Wall Street, I think the movie paints an unrealistic picture. Everybody thinks that if you work on Wall Street, it's just like the movie Wolf of Wall Street. That was back in the day when you had these penny stock cold calling rooms where stockbrokers were cold calling, you know, elderly people and unsophisticated investors and just essentially scamming them. That's really not a big picture of what, you know, the investment business is actually like. That was more of a movie about a fraudster that had a boiler room scenario. Hey, Tom G, what's up, Tom? Says it's a revolution. Jonas here says, hey, Tom, what's up? Hey, Michael Dwyer says, Mick and Donna from Wisconsin are enjoying this walk and talk. Thank you for including us, Tom. Well, thank you for being here. I appreciate it. And I'm glad you're enjoying it. I'll give you guys one last beautiful view of Grand Central Station right here, as well as the Chrysler Building. Hey, Hector Hicks says, hey, Tom, been watching your stream for a month. and really appreciate what you do. Thank you so much, Hector. I appreciate it, guys. Hey, Tariq. What's up, Tariq? Good to see you, my friend. Happy Friday to you. Yeah, Miguel. I agree with Miguel. Dusty Cole says love the outside area. I do too. I think they did a great job. I mean, this is right here on Vanderbilt. And this is actually the lobby of the brand new Vanderbilt building. Yeah, Clarence Jackson says, Tom, have you heard about Ken Griffin Wellington Fund 22% or 29% gain year to date? Yeah, Clarence, I have. So Clarence, what are your thoughts on Ray Dalio stepping down essentially from his co-CIO position at Bridgewater? Now, I know Bridgewater's, I think it's, their full alpha portfolio has returned like something crazy, like 32% this year as well. So the folks at Bridgewater are doing a fantastic job too. Hey, it's my internet mom, Sunshine, New York City. What's up? Good to see you, Sunshine. Here's the TD Bank for all of our Canadians. I think I feel the rain. I think I feel the rain coming here. The one and only Charlie Richardson. Hey, Charlie, happy Friday to you. The wind is starting to pick up here in New York. We just talked about the non-farm payroll numbers. Miss Brown Eyes is here. It's TGIF, Deep Value Alex. It's good to see you, Tom. The other day you left us off on a cliffhanger. Ben Mala, maybe I missed it. What's the story? Ooh, I gotta save that for another time. I can't tell the Ben Mala story yet. But yeah, I think my phone died and I had to cut the stream short. So I apologize for that. Dark Ops is Tom, do you know the book Rich Dad Poor Dad? I do know that book. It's a very good book. Brad says, what's the market makeup generally of the Wellington Fund? Well, I think if it's Ken Griffin, he probably run some sort of a quant strategy. You know, being Citadel, it's a big quantitative hedge fund. So it's probably some sort of quant strategy for sure. Now, in terms of merger arbitrage, there was a big merger arbitrage trade by Carl Icahn. I think he made $250 million on his trade buying Twitter. Now, the thesis of the trade is very unique. So Carl Icahn essentially bet that Elon Musk would have to close on the Twitter deal under originally proposed terms. So Carl Icahn, I think, accumulated a sizable stake in Twitter at around $30 a share. And on the news that Elon Musk would have to follow through with the originally proposed terms of the deal, the stock rallied about 25% in 2 days. Fantastic piece of merger arbitrage there. Zach Drew's inflation report for next month might be higher because of the energy costs. Yeah, I'm not sure if it's going to be in there because it's maybe a little bit lagging. But Zach Drew, you make a good point. I mean, look at Brent crude right now, and look at light crude futures, ticker symbol CL. We've actually rallied back above the 50-day. And it's definitely not helping that OPEC has announced that they are cutting about 2 million barrels of oil a day. So if you look over here, this is the beautiful Stephen Schwarzman building, the New York Public Library. Ed Dunkel says core inflation doesn't include energy. Yeah, Ed, you're correct. So the headline number includes volatile food and energy, but core does not include food and energy, which is actually what the Federal Reserve likes to look at more, is core inflation. Now, it didn't help that non-farm payrolls actually beat expectations today, and wage gains actually beat expectations. Wages are up 5% year over year. And I think that's why you saw the markets get hammered today. Now, I said this last night on the live stream. I said, if we get a non-farm payroll report that is above economists' expectations, you're going to see this market really come under pressure here. And that's exactly what happened. This is the Salesforce Tower. Salesforce is an enterprise software company under the ticker symbol CRM. They recently just bought Slack, a former publicly traded company under the ticker symbol SLAK. Tom G is here. Good to see you, Tom. Ed Dunkel, Line Sync is here. Tom G. Aaron is here. Welcome. Yeah, Dark Ops is Steven Schwartzman. We could think of the Blackstone Group. He actually just recently put a book out. I would highly, highly recommend everybody go check it out. Hey, Clarence Jackson says Ray Dalio feels comfortable. Enough with the co-CEO. Former Cigna Insurance CEO. Copy that. Yeah, and I mean, Ray Dalio's getting older. He's had an unbelievable career. Now, when I heard the news, I actually got a little bit excited, Clarence. And the reason why I got excited is because he's probably going to have a lot more free time to write more books, put out more content. And I'm a big fan of Ray Dalio. So I think we are going to be blessed with a lot more Ray Dalio content to learn from one of the greatest hedge fund managers of all time. Now, I love these type of stories because Ray Dalio started his hedge fund out of a Manhattan one-bedroom apartment. So a really, really entrepreneurial success story. Ray Dalio is a great guy. I recommend his stuff all the time. Principles by Ray Dalio is another good book. Hey, Fluttery Shy says, can you please show us the Bryant Park ice rink when it opens? I love your videos, Tom, and I'm learning a lot. Yeah, absolutely. Well, thank you for watching the videos. And we could absolutely show the ice rink when it's up. You know, since we're at Bryant Park, maybe we'll take a quick walk through. Very seldom do we actually go in Bryant Park. Brad's Brains says, Tom, still very impressive quant analysis strategy in this environment. Very impressive in my mind. 29% seems remarkable to me year to date. It is. 29% is huge, huge alpha. Well, I mean, if you think about it like this, you know, think about all the people who work at Citadel Securities or Bridgewater. These are the smartest people on earth, literally. You know, these people have gone to really, really top tier schools. Great group of people, very smart, super sharp. So Clarence Jackson says Tom, Ray Dalio is planning to get more involved with philanthropy with the Dalio Foundation. That's good news too. I saw that as well. Now, I want to read a very notable quote on Wall Street. And for many of you who are in the chat that have had a career on Wall Street, you've probably already heard of the quote. But I think it's very, very important to review it and sort of understand what it means. Wow, Bryant Park is looking nice tonight, everybody. Very quiet, very calm. Love it. And the quote is, you feed the ducks when they're quacking. I'll say it again. You feed the ducks when they're quacking. And this quote is very reminiscent to me and reminds me of all of the irrational exuberance we've seen throughout the COVID crisis due to excessive money printing. Wow, it looks like they're actually building something here, everybody. Check this out. You guys think they're building the Winter Village already? There's no way that they're building the Winter Village already. That's insane. What do you guys think? Hey, my friend the ABX girl is here. Good to see you. The ABX girl is a former Wall Streeter herself. Teresa Diaz says yes. Hey, Teresa, look at this. It looks like they're just building the Winter Village here in Bryant Park right now. Brad's brain says, yeah, it's October. It still seems a little bit... It still seems a little bit early. I don't know about you guys. I'm not a big... You know, it seems like capitalism is very good at pushing the holidays on us closer and closer every year. Has anybody noticed that? I've noticed that every single year. It seems like when I walk into a Walmart, a Target, something like that, it seems like every year it's a week earlier we see Christmas stuff. A week earlier we see Halloween and Thanksgiving stuff. Hey, Charlie Richardson says it seems like they're already starting to work on the Winter Village. Yeah. MK says maybe it takes a month and it won't be ready till November 1st. Check it out. I love Jeremy Siegel. Check it out, says the Fed. He says the Fed may over-tighten. Yeah, and I think they will. Now, on this channel, I've sort of been explaining the Fed in a little bit of a different way, and I'll sort of explain that again. And I've been explaining it, well, let me try to figure out the right terminology for it. Oh, they are building the Winter Village, you see? Because this is all closed off. Usually this entire walkway here is going to be all of the, whatever you call it, the shelters, I guess, little storefronts. So a lot of people that have been appearing on CNBC, Bloomberg, all the main mainstream financial channels, they've been very argumentative when it comes to monetary policy, which is fine. And I think that it's important for everybody to give their opinion on if they think the Federal Reserve is doing a good job. Should they be tightening more? Should they not be raising interest rates? Should they be raising interest rates? But my view on the entire thing is the Fed is going to do what they want to do regardless of what I think. Does that sort of make sense? So in my opinion, I don't really want to spend my time giving my opinion on should the Fed be raising rates, should they not be raising rates. I'm not sure if I'm allowed to walk through here. Maybe we'll try. What I'm more interested in doing is saying, what is the Fed doing? And let me adjust my portfolio to those parameters. Does that sort of make sense? So when the Fed is raising rates, I'm risk off. I'm not taking on risk. Now, I have my opinions about what the Fed should be doing, but I think for the sake of the stream, what I've been more keen to be doing, I don't think I'm allowed to walk here. Hold on, let me get out of here. I've been saying, look, we need to face reality, and the reality is the Fed is tightening. And there's an old saying on Wall Street, don't fight the Fed. And I'm not trying to fight the Fed. Because the people who have been fighting the Fed this year has been getting their heads ripped off in the market. Yeah, Clarence Jackson says, go with the flow, don't fight the Fed. And that's exactly what some of the best money managers in the world say, right? Stanley Druckenmiller, Paul Tudor Jones, Ray Dalio. So I agree. Do I think the Fed is going to overshoot? Absolutely. They have historically always overshot, both to the upside and the downside. They usually overstimulate, which they did during COVID, and they're going to over tighten, and they're going to over course correct and create a ton of demand destruction. Check this out. So the Winter Village is literally held up on these stilts. This is interesting. Hey, Anita Patel says Bank of England too slow. Good to see you, Anita. Bagels and Walks is here. What's up? Welcome, Bagels and Walks. dad is here. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, and we'd love to have you guys along for the walks. But check this out. This is the Bryant Park Fountain overlooking the Steven Schwartzman building, as well as the beautiful One Vanderbilt. Now, I think this topic goes right along with this quote, "You feed the ducks when they're quacking." So as we talked about, yeah, is the Federal Reserve probably going to overdo it and tighten and crash the economy and crash the stock markets? Yes. But they also, during bull cycles, they overstimulate. So when the ducks are quacking, you feed them. So here's sort of what I mean by that. The Federal Reserve has caused a ton of irrational exuberance. And I think the most speculative excess has came in the form in 2020 and 2022 with all of these initial public offerings and SPACs, or special purpose acquisition companies. And these investment banks, and we've been talking about this because during earnings season, we always do an earnings review of all the major investment banks. In 2021, investment banks made record profits on investment banking fees. So if you think about Goldman Sachs, Morgan Stanley, Bank of America, all the major publicly traded investment banks, they make the vast majority of their money on fee income. So both on the underwriting side of the house and the advisory side of the house. So as it relates to that quote, when the ducks are quacking, you feed them, retail and investors across the board wanted all of these speculative, nonsensical investments like these SPACs, these money-losing IPOs. So as I was saying, you look at some of these blank check companies, in my opinion, and I have to say allegedly so I don't get in any sort of legal trouble, these were all fraudulent financial forecasts. Almost 90% of them. So what they do with the SPAC is they tell investors, oh, this company, we're expected to grow revenue at 30% year over year. This is our path towards profitability. And I mean, really anybody with the brain could look at these companies and say, this is just all utter nonsense. These forecasts are totally falsified. Now, I have to say allegedly, right? But the thing is, Wall Street doesn't care about that. They could give a crap if these initial public offerings and if these SPACs perform well. Because all they're doing is doing the underwriting for them. They're providing the advisory services. And in return, they get paid very, very lucrative fee income. So the banks will do these deals all day. And we sort of talked about this in 2021. It was a record for initial public offerings. It was a record for special purpose acquisition companies. However, in 2022, IPO activity is down 97%. And that coincides with tighter monetary policy. So if the ducks are quacking, you feed them. Wall Street will give you all of this nonsense to invest in, as long as the ducks are quacking. Hey, Clarence Jackson. This is Alan Greenspan coined the phrase irrational exuberance. He will be at the Greenwich Forum as well, says Clarence. Dude, that's going to be an awesome experience. You please fill us in on how that was. Billy says, even when you're hungry, never act like you're starving. Good to see you, Billy. All right, so now we are all the way at West 39th Street and Broadway. We have a little bit of a ways to go. Tariq's is quack, Powell quack. Greenspan was back. Hey, Laytha's here. Good to see you, Laytha. Anita Patel says, Tom, sounds like the early 2000s. Pup says, are there many women on Wall Street? Yeah, of course. JC Trade says, VIX needs to break 40. I agree. I agree with that. So JC Trade, one of the things we were talking about tonight is it seems that this bear market so far has been very orderly, this sell-off. It hasn't really been that forceful waterfall capitulation that we see at bear market bottoms. So to your point, I think you make a good point. The VIX really needs to blow off here. You know, look where the VIX was during COVID crash. Look where it was during 2018, Christmas Eve. We haven't really seen that blow off in the VIX. Now, I think it's coming, and I think it will happen once the debt market melts down in the United States, sort of like what happened in the UK. You know, we did a quick review about what happened in the UK with the Bank of England being forced to go to quantitative easing because gilts started to sell off massively, causing yields to blow off. And I think once the 10-year US Treasury yield gets to around 4.5%, I think that's when you're going to see really a lot of stress here, because the US Treasury market is extremely illiquid right now. Very illiquid. And I think that's why we're seeing all of these erratic moves. Now, it also doesn't help at all that the Federal Reserve is starting to unload treasuries from the balance sheet. So if you go to the Federal Reserve's website, you can actually see the dollar amount of US treasuries that they're selling. So check this out. So US Treasury securities on the Fed's balance sheet dropped $37 billion this week, according to their H4.1 report. This is the largest drop in US Treasury securities on the balance sheet in 14 years. So you no longer have an automatic bid in the Treasury market anymore, with the Federal Reserve buying treasuries, keeping yields suppressed. So liquidity is drying up, demand is drying up, and we could be in an environment where we see yields spike here. Line Sink says, what happened in the UK can be summed up in 2 words: Liz Truss. Yeah, I mean, I think that you're right. Now, do I think that Liz Truss is a bad person? No. Do I think that... I'm trying not to be impolite here, but I mean, if the UK is suffering from 9% inflation, and many economists think that inflation is going to go to 16% in the UK, do you really think that's a time when you should be invoking a massive stimulus package? Probably not the best time. Zach Drew says they claim the runoff is priced in. Maybe. But what happens when earnings start to come in terrible and earnings revisions start to go down? Yeah, Tariq says would be very nice to get a VIX primer. Laytha says, I don't think it's fair to blame it 100% on one person. I agree. I mean, I would just blame it on the government. Well, I would really blame it on, it's a longer, more complex problem. And it really has to do with the pension funds and pension obligations. And over the years, nobody has ever wanted to face the reality that in order for these pensions to be sustainable, you're going to need the workers to start to pay a little bit more into their own pensions. But that would be too hard of a conversation and nobody would like that. So instead, we create these derivative products where we buy bonds, use them for yield, and then match derivatives over them to help fund these pensions. But the problem is that works when yields are low, right? That works when there's quantitative easing. But what happens when yields spike? Well, you get margin calls. And how do you meet those margin calls? You have to sell assets. And when you sell assets, yields spike even more. So check this out. This is one of my favorite shots of the Empire State Building. This is right here on Broadway. What do you guys think? I think this is a 10 out of 10. I think this is an easy 10 out of 10. Christian Wilson says, what ways can you see the flow of immigrants into New York City affecting the city? I don't know. I mean, there's always been a lot of immigrants in the city. I don't really see it. I've been seeing a lot of the, what's it called? The articles about it. I haven't personally noticed the difference. Harry Connors' iconic 10. Couldn't agree with you more, man. Super, super iconic 10 on that. Paul Tricky with the 8-9. Okay. Not a bad score. Now, I posted a lot of charts on Twitter. So if you guys want to stay updated like through the day and stay connected, if you follow @WalksWallStreet on Twitter, I oftentimes post a lot of charts, some of my thoughts, and also retweet some of my favorite accounts. Now, there was this really interesting Twitter account that I came across that I think you guys would find great value in. And I think it's Marlin Capital, I believe, Marlin Capital. And he posted a chart from JP Morgan. This data is coming from JP Morgan. And essentially it tracks order flow and buying and selling volume from retail as opposed to institutional investors and the like. And for the first time since near the bottom of 2020, we're starting to see really, really aggressive retail selling here. Now, I'm not saying that's automatically a buy signal, but I think the pieces are just starting to fall into place. And these are some of the things that you want to see as we get closer to a bottom. I would say we're closer to a bottom than not. I still think we're going to go lower, but if you look at my last couple tweets, I think I retweeted it. I think it was Marlin Capital. So if you follow me @WalksWallStreet, you'll see it. But check out that chart, and this is order flow, retail versus institutional. And it seems like we're having at least a little bit of capitulation there. So I think that's very important to follow as well. Hey, Styles says, if you had an option, which would you live, Hawaii, Texas, and New York City? Ooh, probably New York. If it was just Hawaii, Texas, and New York? Yeah, I'd say New York. I'd say New York City. What about you? Hey, Scott says, have not lived in New York City since 2008. What a treat. Scott, thanks for joining the channel, my friend. Thanks for being here. We appreciate it. We're here at Herald Square, 34th Street, 6th Avenue. Beautiful Empire State Building. This is definitely not Texas. I thought Texas was all right when I went there. Now again, I was only there for probably 48 hours. I went to Austin, Texas. And I went to probably the best barbecue restaurant I've ever been to in my life. It was called Terry Black's. Tariq's Melvin Capital doesn't exist anymore. Yeah, Melvin Capital was in the GameStop debacle. That's not the Twitter account I'm talking about. Marlin is what I'm talking about. It's just a Twitter handle name. But he posts a lot of good data. A lot of good data. Hey, Christian Wilson says, I'm going to save up and move back to New York next summer. Christian, where are you from again? I forget. Hopefully by then rent prices will stabilize or come down in New York. All right, check this out. This is a pretty nice view of the Empire too. Hey, Penelope is here from the one and only Tennessee. Thank you for joining. It's good to see you. We are walking eastbound on 34th Street. So speaking of the housing market, I believe as of today's close, according to bankrate.com, the 30-year fixed rate mortgage is going for about 6.95%. So I think we're going to start to see in Q1 and Q2 the real effects of those interest rates. So the good news, okay, I know we've been talking a lot about the bad news, but let's talk about the good news for those potential first-time home buyers here. I think you're going to be able to get some good deals. I think in Q1 and Q2 of 2023, I think that is when you're going to start to see notable price declines in the single-family housing market. Now, we're already starting to see that in condominiums and apartments, not so much in single-family, but I think it's going to start in Q1 or Q2. So if anybody's looking for a single-family home or an investment property, I think number one, you're going to have more negotiating leverage, right? Probably better terms. And I wouldn't be surprised to see, 10% haircuts, maybe across the board, especially in those markets that were really, really turbocharged due to the pandemic. All right, this is a view of the Empire State Building, literally right under it. Hey, Deepak G says, hi, very nice, and your efforts of presenting. Thank you so much. Hey, James V is here. Says, hey, Tom, James V checking in. What's up, James? I give this 9.6. This is a very interesting view of the Empire. I give it a 9.6. 9.8. Wow, Gregory coming in high. MK says, I was just going to ask you, what do you think will happen with the local rental market in New York? I think it's going to cool down. I think it's going to come down. But I think you're going to start to see those declines in Q1 and Q2 of next year. I really do. Wow, a lot of people like that shot. I never really give you guys that view of the Empire. Hey, Pablo says, I'm going on vacation in November. I'll be staying in Astoria. Astoria is beautiful. Astoria, Queens is awesome, man. You're going to have a really good time. Welcome to New York. Thank you for visiting us. A lot of traffic here coming down 5th. Hey, Deepak G says, hey all, good to see you, Deepak G. MK says, Tom, my lease is up January 1st, and I'm looking forward to another good deal. Now, I don't think you're gonna get those COVID-style deals, but I think a lot of the bidding wars for apartments is gonna subside. So in those terms, I think you're gonna get a very good deal. Because what we've seen, it's been very, very strange in the housing market, and we've talked about this before. But what we've seen in the housing market is a transition from these bidding wars in single family spilling over to the rental market, because all of these bidding wars and higher interest rates has driven buyers out of the market. So when buyers are driven out of the market, well, where do they have to go? They have to go back into the rental market. So we've actually been seeing a lot of bidding wars in the rental market, which is just absolutely bizarre. But I think a lot of that is going to subside. Hey, Dean is here. Good to see you, Dean. Dean Winchester is here. Styles says, where do you like to hang out in Manhattan? All over, really. But if I had to pick my favorite place in Manhattan, it would definitely be maybe the Upper West Side. I would say the Upper West Side of Manhattan. Hey, SoCal Lawrence, thank you so much for the $2 donation. You are way too kind. Thank you, everybody, for the support. I wanted to say, YouTube sent me an email of our channel analytics last month. And I think the YouTube channel, the live stream last month, had the highest growth ever. So thank you, everybody, for being here. It's insane. So I just wanted to say that. Thank you all for joining. We have a lot of new people here, so hopefully you're enjoying the streams as well. I just realized I made a wrong turn and I'm actually walking uptown. So we're actually gonna head downtown. But this is the CUNY Graduate School, CUNY Graduate Center. Jim Wolf says, thank you for these great videos. Jim, thank you, sir. You're the best. Wendy England, Karina Thompson, Sally. Hey, Abdul is here, welcome. So Brad's Brain says, Tom, I plan to rent in Houston for a year and hopefully buy in a buyer's market. Timing the sell here in KC is difficulty, but have an offer, just working through it. Hey, Brad, that's awesome, man. So you're making the move to Texas. Very cool, Brad, awesome. Is just starting to pick up. Hey, Pup says, I found your channel a year ago and couldn't find you for months. All I remember was a great New York accent. Glad I found you. Thank you, Pup. I appreciate it. Very kind of you to say. Thank you to all of our moderators too. Hey, Neil Bells, Tom, relatively recent, 3 weeks or so. New subscriber here, most impressed thus far. Very much enjoying your streams. Well, thank you, Neil. Ripe says, love the info about the buildings you give, especially the place where Yoko Ono lives the other week. Much love. Yeah, so that's true. We were finally uptown near the Dakota. Yeah, we could cross. So the Dakota building is on 72nd Street and Central Park West. And that is unfortunately where the famous member of the Beatles was killed. This is also a pretty nice view of the Empire here. Hey, Rodrigo Silva, what's up, Rodrigo? Says, is New York City always busy at this time, or is it because of a Friday? So I think it's a good point. Now, I think it's probably maybe a little bit busier because we're headed towards Koreatown, and Koreatown's a big party area, big party scene in New York. And probably because it's Friday too. There's usually a ton of people going out after work at their offices to Koreatown. 32nd Street is really the main street here at Koreatown. Nelson Sanchez says, hi, I just found your channel this lovely Friday evening. all the way from San Francisco, California. Hey, so I have a question for you. Thank you for joining, by the way. Thank you for subscribing. You know, one of the things we've been seeing in the real estate market, now, if you guys want live data, so real-time live real estate data, there's this Twitter account. They're actually a big company here in New York. They're a startup. They're called Parcel. And supposedly we're seeing declines starting to happen in San Francisco, California, as it relates to real estate. So as somebody who lives in San Francisco, what are you seeing on the ground floor? Are people moving out? Has things come back? Has it recovered from the pandemic? Do you think that foot traffic in San Francisco is higher, lower, pre-pandemic? Sort of, what are you seeing on the ground over there? Because I've never been to San Francisco. It's one thing to hear from friends or one thing to hear from, you know, people on the internet how it is, but I think it's best to hear from people who actually live there. Bradley S. says, Tom, I'd love to walk this walk. So ironically, this is a very good Korean barbecue restaurant. It's called Love, Love, but there's actually an even better Korean restaurant right next to it that's called MIDTOWN. And now it is rather expensive. However, I think if it's your first time in New York, I think it's worth the money. I think it really is. It's one of my favorite spots here in New York City. So Nelson says, Tom, people are currently moving out, to be honest, and businesses are closing down. Wow. Yeah, I mean, that's what I heard from some of my friends who used to work there in San Francisco. Many of them are actually moving back to New York. You know, I had a lot of friends from college who moved out to San Francisco, but they're like, you know what? I like New York a lot better. I'm coming back. So thank you for that update. Appreciate it. So this is MIDTOWN, fantastic Korean barbecue restaurant, specifically in New York. One of my favorites. But since we're in Koreatown, I actually want to walk to my favorite Korean restaurants here. Hey, Sabrina Fair is joining us on this Friday night. Good to see you, Sabrina. Thank you for joining. Bradley S. So many high-end stores, hotel, nobody's going in and out. Styles says, I'm craving some Korean chicken now. You know, I didn't eat dinner, so I think when I end the live stream, if Pelicana Chicken is open, I may go to Pelicana Chicken, not gonna lie. Maybe, we'll see. Tons of traffic. Hey, Blues Rider is here. Says, if you're going to San Francisco, be sure to wear some flowers in your hair. Classic Blues Rider, love that. Blues Rider, we were talking about non-farm payrolls. Consensus was 250,000 jobs. We added about 263,000 jobs, which means the Fed is probably going to continue to raise rates. You know, futures traders are pricing in a 90% probability of an additional 75 basis point rate hike in November. Nelson Sanchez Campos says, Tom, it is also getting very expensive in the city and mortgage payments high, and they rocketed in the last year. Yeah, that's true. So Nelson is totally right. You know, think about the affordability crisis that's going on now. When we had 30-year fixed rate mortgages going for 3%, and now, as of today's close, we had the average 30-year fixed rate mortgage going for 6.85%. No, 6.95%, excuse me. Crazy. So rates have gone parabolic. Rates have made a 100% move. And home prices have not really started to come down. Now, what we have seen is the volume in sales transactions fall off a cliff. Oh, that was a big rat. Man, that was gross. So that's usually the first step, right? The first step is not price declines. The first step is transaction volume falling off a cliff. Look at all this garbage here. Did anybody see that article? I think it was in Bloomberg that the city of New York paid McKinsey $2 million or something like that to do a case study if it's a good idea to leave garbage on the street. And I'm not joking, by the way. The city of New York paid McKinsey a couple $1 million to do a study to investigate if it's a good idea to leave garbage on the street or put them in the garbage cans. Seriously, that's not satire. We spent in the city millions of dollars to have these consultants figure out if it's a good idea to throw trash on the ground. That's probably, I think, the most ridiculous thing I've heard all week. Yeah, Laytha, that was my first thought. Laytha, that was exactly my first thought. I'm like, $2 million to figure out if it's a good idea to leave garbage on the street? Why don't we just feed the homeless with that? I would much rather have the tax dollars just go to feeding the thousands of homeless people we have in the city than that. But I think we could pretty much understand why they did that. You know, one hand washes the other, if you will, corruption. Hey, Abby wants, wow, that's a lot of people on the sidewalk. Yeah, I think it's sort of like a karaoke place they're waiting for, perhaps. Yeah, MK is like they could have at least paid them for strategic solutions to solve the homeless problem. So, Marcy, I saw that too, but I think the real thing that they're gonna do is invest money into building garbage cans that are enclosed. So I think on the side of the streets, you're gonna see these garbage enclosal, like sort of like capsules that hold the trash. Now, I don't know if you needed to pay McKinsey $2 million to figure that out. You could have paid me a couple $100 grand and I could have told you that myself. Like, look at all this garbage on here. Like, that's a lot of garbage. You guys got to admit, this is a lot of garbage. Hey, 48 is here. What's up, 48? This is good evening, Tom. Hope you're well. I'm doing good. 48 is joining us from the one and only. Oh, somebody says check your battery percentage. 10-4. 10-4. Thank you so much. Copy that. Hey, Andreas A. So how many millions will it cost to implement those garbage cans? I don't know, man. If I had to guess, how much would it cost to implement garbage cans across the city? Probably north of 20 million. Do you think I'm lowballing that? Do you think I'm lowballing that number, everybody in the chat? To install, so first I think it's good to give some context here of what I'm talking about. Now, if you Google New York City garbage McKinsey, you'll see the garbage capsules that they're talking about. And so you could sort of understand how big they are. But if you were to deploy that through the entire city, I think you're probably talking north of 20 million. I think that's fair. MK is your lowballing? Oh my God, okay. Maybe I should be less fiscally responsible. I guess I wouldn't make a good politician. Hey, 3T3 says how many billions will it take to implement the rate hike? Yeah, it seems like it's all day trash. So you know what, everybody? And you guys are gonna get a kick out of this. I actually brought a backup battery pack with me tonight. And I think tonight is a good day to try it out. It's Friday. We covered a lot on the streams. We talked about a lot. So I think now is a good time to test out the backup battery pack. Hey, Marty Lewis, my good friend Marty. Says, hey Tom, I'm more concerned about the loose garbage sitting on the streets and sidewalks where someone dumped a trash can. I saw a lot of it last night on 10th Avenue. This is Marty. Good to see you, Marty. Marty Lewis, you know I gotta ask. I gotta do it. I gotta ask. Did you go swimming today? Marty Lewis is probably the best swimmer out of anybody on the channel. All right, hold on. I'm gonna put down the camera. I'll be back with you guys in a second. We're gonna try out the battery pack. I wish we could play like holding music. Hey, Brian says you'd be a good Fed chair. Don't need to be a politician because they're bought out anyways. Yeah, that's true. You guys think I would make a good Federal Reserve chairman? What do you guys think in the chat? You think would I do a good job? I think I would do all right. All right, we're good. We got the battery pack on. MK says, yes, you would make a good Fed chair. Well, I appreciate that. All right, so far so good. We got the battery in. Yeah, Ryan Royal's like, as long as you kept doing the live stream. So I think back in the day, if you guys remember when I first started doing these live streams, we would stream on an iPhone 11 Plus, and the battery was massive on that thing. So we would push like 3-hour live streams. But ever since I switched to the iPhone 13 mini, it seems like we would only do 2-hour streams. I can't believe we've already been streaming for 2 hours. Michael Ryan says the qualifications you would have to lack empathy and be a psychopath. Yeah, maybe I wouldn't tick all those qualifications. Two-wheel freedoms. This is Tom. First job is Fed chair. Chuck money printers out the window. Yeah, true that. So two-wheel freedom. Give me an update, man. I want to make sure you're all right. How did your house hold up during the hurricane? Hopefully everything was good. I know I was messaging you on IG. Yeah, hopefully all of our Floridians, more specifically on the west coast of Florida, hopefully you guys are good with minimal property damage. All right, so this is West 28th Street. Near Barn Jew, which is also another good Korean restaurant. We have more garbage here piled up. Dark Ops says, I want to buy this year an iPhone 13 mini. Well, did anybody hear the news coming out of Apple that they're actually going to scale back on iPhone 14, is it? 14 production? Because the demand has just fallen off a cliff. Now, I mean, what do they expect? If you continue to put out devices or phones with very, very minimal upgrades, I mean, it's not necessarily going to spur many people to go out and buy your product. Now, I think the only major changes that would appeal to somebody like me, as we're speaking about, you know, features of the iPhone, supposedly the stabilization feature will allow you to shoot video without any type of stabilization, like a gimbal, like the one we're using right now. But I don't think that's going to work at all, because when we're live streaming, we have to use a streaming software like Streamlabs or something like that. And what many people don't understand is whenever there's a new hardware update, the software developers at a lot of these software companies have to write code to be compatible with the new hardware. And I think that's going to take some time. So if we're just live streaming and I'm just merely holding the phone in my hand, I think it's still going to be totally unstable. Now, I think Streamlabs and a couple other big name companies are probably going to be hard at work on that, but I wouldn't hold my breath. Yeah, Marcy says, I'm team, I don't buy a new phone until mine stops working. That's exactly how I was. The only reason why I had to buy this iPhone 13 mini is because I dropped the phone on my iPhone 11, and the only thing that broke on the phone was the camera. And that's the only thing I need to use for the live stream. Hilarious. Borat says, Tom, do you need 1,000 subs before you could stream on YouTube? I think you do. I think that is the rule. This is West 26th Street. Hey, Jose says, good evening. What's up, Jose? Good to see you. Michael Ryan is here. Juan Pablo, Dark Op. Tish TV Inc. says, hey, Tom and everybody. Nelson says, I remember an occasion when garbage truck workers went on strike. Yeah, I remember that too. Now, I think the Amtrak train recently went on strike, but that was averted. I think the Biden administration came to some sort of a conclusion. Hey, D is here. What's up, D? Good to see you. Michael Ryan says, are there any real New Yorkers left in New York? Yeah, for sure. Mr. Wonderful says you could bypass that rule using Prism streaming service on YouTube. Oh, what, the 1,000 subscriber rule? I think you may be right. I think if you use something like Streamlabs. Hey, Faber5 CEO says, hello from Tampa, Florida. Can't wait for our family vacation in New York City next Saturday. Hey, awesome. Always get the creepy crawlers at night. So Tampa, Florida, give me an update. Are you guys all right? I know that Hurricane Ian really slammed into the west coast of Florida, so I hope you guys are doing okay. Hey, 21, awesome. Good to see you. Blues Writer says random yelling, yeah. Optima 17 says I've seen people live stream with 500 to 600 subs. Yeah, I think maybe there's ways to get around it. Maybe that's just through the actual YouTube app. But then again, if you try to stream through the YouTube app, it's going to look really horrible. It's going to be like 720p. Yeah, so I try to stream on 1080p, but depending on if we're in a really bad network area, it'll reappropriate it down. Zin Lee says, Walks, do you ever talk No, not really. Faber 5 CEO says we had some tree limbs down, but maintained power. A lot of neighbors lost power for a couple days. Definitely nothing. Well, I mean, you guys definitely lucked out. I mean, I was there in Tampa, not in Tampa, Miami, Florida, during Hurricane Ian, but we only got like a couple little Ian bands. So we pretty much got nothing. I mean, north of me in like Fort Lauderdale and things like that, we had a couple tornadoes touch down. I think in Broward County, there was a couple tornadoes that touched down too. But I only lost my power for about maybe a day and a half. And then it came right back on, so. Well, thank God. I mean, you know, some of the footage from Hurricane Ian was really reminding me of Hurricane Sandy. And the storm surge is just horrible. So hopefully people can start to rebuild. But I will say this, and let me know what you guys think in the chat. We very, very seldom do we get political on this channel. We usually talk about the financial markets, but we sort of covered all the topics we needed to cover today. And we are on hour 2. This is usually when we end the live stream. But I actually think the response to this hurricane is very, very surprising to me. And I think the Biden administration, as well as Governor Ron DeSantis, this is like a perfect case study of effective governing. Seriously, this is like a perfect case study of how government should be working for the people. And this is coming from somebody that is a conservative, that leans conservative. And I give credit where credit's due. I tend to be very fair. I think I'm very fair. And this, people that I know that in Fort Myers, they're like, we have every single resource we need. I know people who were evacuated, and they said they came and got us within 24 hours. So I give it an A+. The hurricane response and the cooperation between the federal government and the state government, I give it an A+. And I think it took no longer than like 8 hours for the Biden administration to approve every request that DeSantis had asked for from the federal government. Approved it immediately. Had all the resources, all the linesmen were down there. So this is like a textbook example of what never happens. So for once, the government is finally doing the right thing for the people. I'm shocked. Hey, DM is here. It says, hello, Tom. You may be embarrassing us native New Yorkers when you highlight the trash and rats on our streets. I love this city. I love it too. I love it too, but we're not going to make it better if we don't highlight what's bad. I don't really like to sweep things under the rug. But I understand your concern, DM. I think New York City is the greatest city on earth, but I think it can be improved. I think it should be improved. You know, DM, we talked about this crazy thing that happened. So the city of New York paid McKinsey, I think, over $2 million to do a study on if it's a good idea to leave trash on the streets or to put the trash in the trash cans. We spent $2 million on that. So we are now here at the Flatiron building, which is on the corner of 5th Avenue and Broadway. One of my favorite buildings in the city, I think top 10. Hey Connor, good to see you. Blues Writers, his response was excellent in Naples, actually. Fort Myers is just short on housing. Kevin Ramsey, good to see you. Bradley S. 75 basis point more hike. Dow drifts 2,000 points lower. Layoffs begin. Yeah, I think futures traders are pricing in about a 90% probability for that, for a 75 basis point rate hike in November. You know, I think the most important thing that I wanted to say on the stream, and we sort of talked about this already, you know, if you look at the long-term trajectory, right, if you go to a weekly view of the S&P 500 or the Dow, the NASDAQ, we're just starting to cut under the 200-week moving average for the first time, really since 2008. You know, the only other time before that where we undercut the 200-week moving average was in 2020, but that really doesn't count because that was really during the COVID crash. So if we hold below that 200-week, this could get pretty messy really quick. So just be cognizant of that. Hey, Abe Blessed is here. Good to see you. Connor says, good to see you, Tom. Hopefully everything is all right with your home in Miami after Ian. Yeah, I mean, we were really blessed. I was really, really blessed. Everybody in Miami, we were pretty much untouched by Hurricane Ian, which was very, very good news. The vast majority of the hurricane actually hit the west coast of Florida. Hey, Great Walk says hello from Argentina. How's it going? Good to see you, Great Walk. Miss Bray says, the truth is that happens when politicians work together with people. Yeah, I agree. It's just sad that it took like a big tragedy like Hurricane Ian in order to do that. Zinli says, walks on Wall Street. How are you able to travel back and forth from New York to Florida? Mainly because a lot of my clients are based here in New York, but once the pandemic hit, ooh, check out this Tesla taxi here, everybody. Beautiful looking taxi. You know, once the pandemic hit, the thing is, a lot of my clients that are in healthcare bought out a lot of businesses in Florida for expansion. And my resources are needed down there. So depending on when I'm needed, I'm either in Florida or New York. But I think they're two of my best favorite places. So it's starting to rain, so we're gonna head back to Penn Station. I'll take you guys with me. Now tomorrow on the stream, since we couldn't make it all the way down to the Brooklyn Bridge tonight, we will be streaming at 8:30 p.m. tomorrow. So we're gonna be walking all the way down to the Brooklyn Bridge. But tonight we're gonna head back to Penn Station just because I didn't know it was gonna start raining. Blues Writer says, Tom, will you be in New York City or Miami for the Halloween parade? So when is the Halloween parade? I'm assuming it's on Halloween, right? If it is, then I'll probably be in New York. Great walk. Well, thank you for coming back to the live stream. We appreciate it. Marcy says, Tom, have you been to LA? I haven't been to LA, and I kind of really want to go. What about you, Marcy? You went to FIT, brings back memories. Yeah, the Fashion Institute of Technology is a great school in the SUNY system, State University, New York. All right, I got a question for you guys in the chat now that we're walking back up to. I think this is a good poll as we were talking about real estate today. If you had to pick two places or two cities specifically in the United States to live in, what would those two cities be? So if you could only travel between two cities in the United States, what would those two cities be? I'm curious to see your answer. Now, my answer is New York City and Miami. I think those are my favorite two. Laythus is New York City and LA. Good answer. Solo Flyers is New York City and Key West. That's a good one too. Michael Ryan says none. Maybe he doesn't like the United States. Dusty Cole, Honolulu, Hawaii. That's a good one. Marcy says you should definitely go to LA. Dude, this is Bay Area and Austin, Texas. Austin was a fun city. 3T3 says New York City and San Diego, California. Wow, a lot of San Diego. I was not expecting that. Brad's Brain says KC in Houston. It's purely family-based. Understood. Understood. Scott says San Francisco and New York City. Hey, Jackson Church. What's up? This is New York City and LA. Nelson Sanchez says New York City and Maryland. Stay on the East Coast. Yeah, I'm a big East Coast guy too myself. I mean, New York, obviously, I'm a little bit biased. My family's here. I love New York, but I think Miami is a nice culture change. And it's also different because it's warm all year round. Kevin Ramsey said Cincinnati. Cincinnati, Ohio. Interesting choice. You know, I did not expect such diversity in the answers here. Okay, Blues Writer says Toronto and Maui. Toronto's a great city. I got to get back to Toronto. You know, I was planning a trip to Toronto, Canada, but then freaking COVID-19 happened. Dusty Cole, Tucson. Gary says New York City, LA, and Dallas. Never been to Dallas, Texas. I'll have to check it out. Michael Dwyer says Nashville, Tennessee, and New York City. Nashville's a great city. I've been in Nashville for exactly 24 hours. So this was back in the day. I had a big meeting in the AT&T building over there. Ooh, she got arrested. It's not good. Oh, check out how unique this looks. This is a very, very cool place. So I had a meeting in the big AT&T building there, but it got canceled, so I spent the entire day walking around Vanderbilt University. I don't know what happened there. That's not fun. So Zach Drew says Nashville, Tennessee is very different than, yeah. Clarence says New York City and LA. So it seems like we have a lot of New Yorkers and a lot of people from California here. But Vanderbilt University is absolutely gorgeous. Lansing says, Tom, I wouldn't want warm temperatures all year. Marcelo says, hello, Tom. Pompano Beach, Florida. And Lowell, Massachusetts. Very nice. Yeah, I need to be in a place where it is... I need to at least have something where it's like 80 degrees all year round. This is another really nice restaurant that just opened. I think this is a Greek place. I think I showed you guys this once before. Oleda, is that right? What do you guys think of this view of the Empire? Dark Ops looks expensive. Teresa Diaz says, Tom, what percentage of subscribers are from California? All right, so since this is sort of like, I think we're going on Walks on Wall Street after hours. We usually only stream for 2 hours. We're going on 2 hours and a half. So I'll give you guys some interesting analytics of my YouTube subscribers, and which is really mind-blowing, by the way. Now, the vast majority of the audience is from the United States, but the second biggest audience is from Canada, then Brazil, and then I think it's Argentina. So I think it goes United States, Canada, Brazil, Argentina. And if you break it down to city level, I think the vast majority of the audience is located in New York. Number 2 is Miami, and I think that that really switched up ever since I moved to Miami, Florida. Obviously, the search volume is very... So the way most people find the stream, according to YouTube, is recommendations. And the algorithm sort of knows what we talk about, right? So we talk about the financial markets a lot, so it'll recommend my videos to people who watch other videos about like the stock market, things like that. But it'll also recommend my videos to people who are looking at like travel ideas, according to what the YouTube analytics say. So people who are searching in Google, New York City, Miami, Florida, moving to Miami. You know, one of my highest search, how people find my YouTube channel by search, it's moving to New York City and moving to Miami, which is a very interesting piece of data. Hey, Alejandro says hello from Argentina. There we go. Love that. Olivia Hour says hello from Brazil. Michael Ryan. Hey, Nicholas Dura says, hey Tom, did you hear they added a Krispy Kreme in Staten Island? I did not hear that, dude. Very exciting. I didn't hear that, man. Micah Ryan says, please do not move to Florida, everybody. Well, I moved there. You know what's crazy? You guys want to know how fast time flies? It's been exactly... no, it's been a little bit over a year and 1 month since I moved to Miami. Isn't that nuts? It feels like I just moved 2 weeks ago. Walter says hello from Germany. What's up, Walter? Good to see you. Disney Hatch says the time zone issue keep the UK numbers from being higher. Watching from the UK. Disney Hatch. Yeah, that is true. You know, unfortunately, because, you know, I'm working all day, I can only really start the live streams at 8:30 at night. So, that's a good point. A ton of people from Toronto, though. A ton of Toronto, Canada. A lot of Brazilians, love the Brazilian. I want to visit Brazil very, very much. James Simmons says, hello, I live in a town that has only about 8,000 people. And about 2 hours ago, I heard about 25 gunshots. Oh my God, dude. Jeez, man. That's not good. Line Sink says, Tom, any ideas why so many people watch from Argentina? Yeah, so I had a theory. And my theory is that ever since I started live streaming from Miami, the viewers from Argentina like went up 10x, like literally 10x. And I think that's because there's a big community of people from Argentina in Miami, Florida. So when they're looking for jobs, so I get a lot of emails too. So I'll get a lot of emails from people saying, hey, I found your YouTube channel. I want to get into tech sales in New York City, or I want to get into tech sales in Florida, or investment banking, or I want to work at a hedge fund, things like that. They're like, hey, what is the safest neighborhood that is least expensive? I get a lot of those emails, and I get a lot of those emails from people that are coming from Argentina to Miami, looking for affordable housing, things like that. So I think we have a lot of Argentine viewers from the Miami live streams, maybe. Dusty Cole says I'm in rural North Virginia. People are shooting the guns for hunting purposes. Okay, copy that. Connor, good to see you. All right, so we are back on 32nd Street. We are headed over to Pennsylvania Station.
At all, like he really remembers.
Deep value, Alex, is interesting data. What about sex demographics? So it's actually, this is the most surprising. So the YouTube analytics is so fascinating. Now, my audience, in terms of viewer age, and when I started the channel, I actually wanted to attract this exact age group, and it seems like we've been successful so far. So the vast majority of people who watch this live stream are actually in between the ages of 35 and 75. So we have a lot of people that are headed in towards retirement, late in their professional careers. And I think that's because of the approach, or maybe the delivery of the stream. So a lot of people who watch, like, 10-minute financial YouTube videos about, and the thumbnails are all crazy with, people like these cringy thumbnails, like with people's mouths open and all this nonsense, talking about the top 5 stocks to buy. Like, very seldom do older individuals watch that stuff. Usually people between the ages of 17 to 27 watch those type of videos, and I really didn't want to attract that audience. So if you guys notice, I don't really put any thumbnails on the videos. I try to make it actually boring on purpose. So if you're interested in having a conversation about market mechanics, those are the people that tend to stay on the streams. So I try to give that approach specifically for that audience. Does that make sense? And the sex were actually split about 50-50 even. So that is very unusual for a channel that talks about finance. It's usually mostly men, but we're actually split about 50-50. It's very unique. Very, very unique. Blues Writer says, are you saying I'm boring? No, I'm saying I'm boring. I'm saying that, I just wanted it to be different, because I saw a lot of videos out there on YouTube of everybody really, and I'm not saying those are bad videos, I'm saying they're great, but it's just not my personality. My personality is more analytical. I wanted to also do, I give you guys like sales strategy tips as well. And I think that delivery is best placed over live stream. What I'm saying is there's more I think there's more maturity in the live stream. So the viewers that watch Walks on Wall Street tend to be, more mature. They've been in the job market for a while, things like that. Hey, Robert is here. What's up? Optimus says, I'm 46, I fit right into your demographic. Queen of Swords says, you are very interesting and intelligent. Thank you so much. You are too. Yeah, Blues Writer is like, Tom, you love Teslas, but don't like rats. Sounds pretty normal to me. I'm very happy about what they're doing here at Penn Station, here at Madison Square Garden. Fantastic. Oh, but team, I gotta run because it is 11:21. I think my train takes off at 11:30. So everybody, happy Friday. Please, please, please enjoy the weekend. You guys worked hard. It was a long week. We covered a lot. And I want you guys to take this time to enjoy the weekend with your family and friends. And we will meet again tomorrow, 8:30 p.m. Eastern Time, live from New York City. Hopefully, depending on the weather, we'll be able to walk across the Brooklyn Bridge. So if you want to join the live stream tomorrow, we should be heading over the Brooklyn Bridge. And Saturday is the stream where we don't have a topic, we just sort of hang out. So everybody, thank you so much. Queen of Swords, I appreciate you. Solo Flyer, Abdullah, Danny, thank you so much. If you guys are new here, hit the subscribe button. Leave a like on the video and we will see you tomorrow. Palmetti's, Marcy, Nicholas Dura, the Jet Fighter, all of our great moderators, Line Sync, Michael Dusty Cole, Blues Writer, Michael Ryan, Latha, Robert, Philip Richards, DWG, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. I will see everybody right back here at 8:30 p.m. Eastern Time. Enjoy your weekend. Take some time off to relax and recharge. And we'll get right back at it tomorrow. Take it easy, everybody, and enjoy your weekend.